Well, now many businesses who've managed to come through 2 years of the COVID pandemic unscathed are now facing a greater threat, according to a leading expert on insurance management. Bruce Hepburn, chief executive of Mactavish, says companies are still unaware of the effect that the crisis in Ukraine could have on their business. And Bruce Hepburn joins me now. Bruce, welcome to you. Why do you say that businesses are unaware of the sort of looming cost of the Ukraine war?
I think that when people look at the Ukraine war at the moment and they think of the impact on insurance, they're looking at many of the direct losses that you're seeing. So you're seeing aviation losses and other losses coming straight out of the war. I think it's the wider ramifications which people aren't giving enough attention to. So you're seeing obviously a reduction in production and agricultural capacity in Ukraine and Russia. You're seeing the impact on food and energy prices. You're seeing, as I said, substantial losses coming through to the insurance markets already. But then look at the wider impacts of these supply chain disruptions, the impacts on shipping, on flight paths, on rail systems, on ports. You were just mentioning Shanghai there. You then bring into that inflation. You then bring into that businesses reevaluating their dependence on China and whether they want to shift supply chain strategies, whether you're going to see more onshoring and nearshoring. So you've got a really quite complex mix of things which is going to impact on insurance losses. And the simplest one is if you have a major fire, if you have a factory and the factory gets taken out, the raw material prices are going to cost more. You're going to have delays in getting those raw material prices. It's going to take longer to get your factory back up and running. So your property loss and your business interruption loss is going to be bigger. If you've got a product liability loss, the cost of rectifying the damage that you've caused is going to be bigger. And so what you're going to see over the next months and years is this feeding through in a very significant way to the insurance industry.
You've mentioned aviation just now. That's not the only sector, presumably, that is seeing a big increase in the cost of commercial insurance right now.
No, I mean, you'll remember you interviewed me about 2 years ago, just as COVID kicked off. And I think I mentioned then in early March that what we expect to see is a huge increase in insurance prices. We expect to see cover being cut through new exclusions, and we expect to be seeing claims disputed. And that's exactly what you've had. Your insurance prices are 200% to 300% bigger in many areas than they were 2 years ago, just when COVID kicked off. So you're looking at really, really substantial changes. So you could be paying 200%, 300% more for your insurance, and you're getting less cover for it and maybe less limit for it. But then you had all of these COVID business interruption claims denied by the insurance industry, and they had to get dragged all the way to the Supreme Court before they started to pay these. And I think you're going to see a rerun of that. I think you're going to see cover being cut. You're going to see prices going up further. You're going to see claims being denied. I think you're probably already aware, Ian, of the aviation claims, which look like they're heading to the courts already. You've got billions of litigation there alone. So I think, the insurance industry is going to do what it did after 9/11, after the terrorist attacks, and what it did after COVID. It's going to run for the hills. It's going to cut cover. It's going to jack prices, and it's going to do everything it can to not pay claims.
Absolutely. You mentioned there the events cancellation cover row, which, as you say, ended up in the Supreme Court. I mean, that involved the insurance industry taking a bit of a reputational hit. Do you think the industry's at similar risk again this time around?
I think it is. I think you've also got to look at how the industry is remunerated. I mean, brokers, for example, their remuneration is predominantly linked to the financial success of insurers because mostly they're paid on commissions or they've got commission-related income. So as these prices go up, the brokers are making more and more money. The insurers are looking to fill their boots in the current environment, and you can see why they're doing that. But, the reality is the idea of insurance, particularly commercial insurance, is you pay a premium so that when you have a crisis, they're there to work with you. And what you would expect coming out of this industry is you'd expect a combination of entrepreneurship and compassion, but it just lacks compassion. And it's not there for you when things go wrong. They weren't there for the businesses when COVID hit, and you will expect to see the same thing now. I think that the reputational hit to the insurers and the brokers will be substantial. I think ultimately the financial hit will hit the businesses because they won't get their claims paid, they'll pay more in premiums, and they'll be getting less cover for those increased premiums.
Bruce, you mentioned there the risk of exclusions from policies. Are you already seeing examples of businesses being denied, for example, trade credit insurance in the wake of the current crisis?
You are, and you see much more complexity than that. Again, I don't know if you remember when we discussed it when COVID kicked off. within weeks you had, or within days, you had insurers rushing out exclusions before those end March renewals 2 years ago. So what we're seeing today, I mean, this week we're seeing very difficult exclusions. So we have a business, a construction company that has complex supply chains right across Eastern Europe. And you've got exclusions coming on, and you can understand why these exclusions are coming on, because the insurers are saying we don't want to insure things that relate to Russia. But instead of just talking about legal entities, they talk about Russian persons, Russian people. So you can have somebody with a supply chain, and they're expected to vet whether every board member of some second-tier or third-tier supplier in Czechoslovakia has any Russian nationals on its board. We have a liability policy this week we're dealing with, which protects directors of boards when they're sued personally. And you've got an exclusion on there for, again, any persons related to Russia. So if a company here in the UK has a dual national on its board and it sues this customer of ours with this exclusion, there's no cover because they simply have a dual national Russian on their board. Now, some of these things are not what the insurers intend. The problem is the insurance industry moves quickly to protect itself. And it uses law firms that draft these clauses badly, and they cut swathes of cover, and the brokers aren't really geared up to advise on it, and the customers aren't really geared up to evaluate it themselves. So I think that you will see reductions in things like trade credit, as you said, but actually it's the subjectivities, it's the conditions, it's the exclusions across all sorts of policies that create all sorts of problems.
All right, Bruce, I'm sure we'll be talking to you again about this in coming months. Thanks very much indeed for joining me today.
Thanks very much, Ian.